All right, let's talk about 2026. What if I told you this year could be one of the most misunderstood in recent memory? We're not talking about some massive bull run or a catastrophic crash, but something else. A year that's really going to test investors in ways they might not see coming. So let's dive in.
To really get a handle on where we're headed, you have to see where we've just been. And the market has been on an absolute tear. I mean, back in 2023, the S&P 500 delivered a massive 26% total return. And that momentum, it just kept on rolling right into 2024, with another, get this, 25% gain.
And even into 2025, it just kept climbing, tacking on another 18%. We're talking about 3 straight years of just phenomenal growth. As one market analyst, Professor G, puts it so bluntly, this is not normal. And he's right. This incredible sustained run has created a really unique setup for 2026. It's a year filled with both hidden dangers and, believe it or not, some huge opportunities. And that really brings us to the core idea for this year. You see, 2026 is shaping up to be a real fork in the road. It's the kind of year that could totally shake out investors who are just chasing headlines, while quietly rewarding the ones who stick to a clear, disciplined game plan.
And you know what? The tone for the entire year is basically being set right now this January. The data that we get this month will likely dictate whether growth, inflation, or interest rates becomes the dominant story of 2026.
And what's wild is just how jam-packed this month is with make-or-break data. First up, on January 7th and 9th, we get key reports on the labor market, jobs and wages. Then, from the 13th to the 15th, all eyes are on inflation. You know, the CPI and PPI reports. After that, on the 22nd, the Q4 GDP report gives us the big picture view on economic growth. And all of this, it all leads up to the main event, the Federal Reserve's meeting at the end of the month. Their decision on interest rates could really set the market's direction for the rest of the year. Okay, so with that as the backdrop, let's map out the potential dangers. We're going to look at 3 major headwinds that every single investor needs to have on their radar this year. The first one, and probably the most obvious, is valuations. A huge chunk of the market's gains these past few years has been driven by a tiny handful of mega-cap tech companies. Now, these are amazing businesses, don't get me wrong, but they are now priced for absolute perfection. And this really gets to the heart of the problem. When expectations are this high, good news might not even be good enough to move prices higher. You don't need a disaster for these stocks to fall. All you need is news that's just slightly less than perfect. Maybe earnings growth slows just a little, or margins don't expand quite as much as everyone hoped. And that could lead to a really frustrating year of higher volatility and lower returns, even if the companies themselves are still doing pretty well. Headwind number 2 is interest rate uncertainty. You know, the market has spent the last year basically betting on rapid and consistent rate cuts from the Fed. But what if that doesn't happen? If inflation stays sticky or wage growth is too strong, the Fed could be forced to keep rates higher for longer. And that would squeeze those high valuations we just talked about and make it more expensive to borrow money across the entire economy. And finally, there's the whole geopolitical climate. Things like trade tensions, global conflicts, election uncertainty, they can always spark a short-term sell-off. But the real danger here isn't the event itself, it's how we, as emotional investors, react to it, potentially turning a small dip into a major downturn just by making panicked decisions. All right, so that's the scary stuff. But that's only half the story. Let's flip the coin and talk about the opportunities, because there are 3 major tailwinds that could actually propel disciplined investors forward in 2026.
First up is what I'm calling the next chapter for AI. The last few years have been all about the hype, right? The potential of AI. But 2026, this is the year of execution. It's the show me the money year. Companies have spent billions building out the infrastructure, and now investors are demanding to see the results, the actual return on that investment.
And the crucial point here is that AI is not just a tech stock story anymore. This is a tool that's being woven into the fabric of every industry. It's boosting productivity, it's improving operating margins, it's driving efficiency in everything from healthcare to finance. You don't have to pick the one winning AI stock to benefit from this massive technological shift. Now, our second opportunity is actually the flip side of that interest rate risk we talked about. What if the market's hope comes true and the Fed does start a cycle of consistent rate cuts? Well, the biggest thing that provides isn't just cheaper money, it's clarity. Uncertainty has been plaguing the market, and a clear path forward on rates lets businesses and investors finally plan with some confidence. And historically, a falling rate environment is a huge tailwind for certain parts of the market.
Small cap stocks, cyclical sectors like industrials, real estate, and companies that have a lot of debt, they all tend to do really well when borrowing costs come down and business investment starts to pick up.
And this brings us to our third opportunity, and it might be my favorite, the power of boring investing. See, in a volatile or a slow growth environment, those flashy, high growth names can really struggle. And that's exactly when quality companies, the ones with strong balance sheets, consistent cash flow, and growing dividends, tend to shine.
And there is no better example of quality than a dividend king. This isn't just a company that pays a dividend. This is a company that has increased its dividend payment every single year for at least half a century. I mean, just think about that. Through every recession, every market crash, every period of uncertainty for 50 years, these companies have proven they can weather any storm and just keep generating cash.
So you've got all these headwinds pushing against you and all these tailwinds that could push you forward. What's the one thing that's going to determine your success? It's not about timing the market. It all comes down to your mindset. This slide just lays out the two paths so perfectly. On one side, you have the investor who's probably going to struggle this year, the one who chases every headline, panics during every dip, and tries to time every move. And on the other side, you've got the investor who's positioned to win, the one who stays invested, stays diversified, and stays focused on the incredible, undeniable power of long-term compounding. So as we head into this really fascinating and, misunderstood year, the ultimate question isn't what's the market going to do, it's what are you going to do? In a market like this, which investor will you be?